Hi, my name is Danielle Shay, and I'm the VP of Options over at Simpler Trading. Welcome to your Daily 5. Today, I'm going to be talking about 5 of the most important charts that are on my mind for a variety of reasons. Now, I want to go ahead and start off with the banking sector. Obviously, we know this has been a key area that has been in focus in the news over the course of the past week and a half due to multiple banks imploding. So let's go ahead and look at this chart. This is a chart of the XLF. And what you can see here, and specifically what I wanted to point out, is the fact that XLF was previously one of the relative strength sectors in the overall stock market. We had a very nice trend. We had price above our moving averages, but we also had a squeeze. And what happened was, starting a few weeks ago, we had price cross down below the moving averages. We had the squeeze fire to the downside. The price came back up to this key area of resistance and it rolled over and fell off a cliff. Now, obviously, the banks are an extreme example. We had a lot of different macro issues going on at the same time, but I wanted to demonstrate what can happen and the kind of moves you can see when you have a squeeze like this. That's going to be those red dots, where you have those red dots that then shift to green when a squeeze like this fires to the downside. Now, this is a daily chart in XLF. And I mean, at this point, now that we've seen XLF fall down to these lows, we've found some price support. And we've also had the squeeze most likely run out. Now, the squeeze typically lasts about 8 to 10 bars after it fires. So when you're looking at a daily chart, that's going to be about 8 to 10 days. Now, let's go ahead and look at some of these other charts here as well, because what I wanted to point out is that we have multiple sectors that were previously relative strength areas of the market that are starting to roll over. Now, I wanted to look at John Deere because John Deere is, previously, or at least last year, and really this year as well, has been one of the strongest stocks in the market and one of the strongest stocks in XLI. So what I like to do is I like to look for charts that are starting to shift that can tell us that there might be some bigger shifts happening in the market here pretty soon. Now, when you look at John Deere, John Deere has been in quite a bit of consolidation, but what's occurred over the course of the past couple weeks is we've had a squeeze here, and then we've had another squeeze here. Now, normally the squeeze is going to take the chart in the direction of the trend, but this last squeeze in John Deere wasn't able to keep going higher. It ran into this price resistance, and then the squeeze ended up firing to the downside. That actually gives you a reversal. So what we saw, where we saw the first signals that John Deere was kind of running out of steam when this squeeze right here was not able to take John Deere up to the next level. Then we had yet another squeeze, which again is when you see those red dots like this. We had another squeeze that tried to fire, couldn't, and now it's rolling over. So what you'll see in the market is, I don't know, I hate to put an exact percent on it, but the majority of the time, let's say 70% of the time, the squeeze is going to fire in the direction of the trend. But when it doesn't, what it is it's a reversal. And now what we're seeing is John Deere reverse, and John Deere is breaking below these key areas of price support. Now, as you notice, there's really not a lot of support down here below because the chart has been on such a swift uptrend. So if John Deere is going to fire to the downside, then that would have a major impact on XLI, which is going to be the industrial sector. Now, you'll notice with XLI as well, XLI also has a squeeze. Now, I just want to take a minute to explain what the squeeze is. The squeeze is just a tool that's going to demonstrate to you that there's consolidation on the chart. There's consolidation there, there's energy building up, and eventually that energy is going to break out in one direction or another. Now, for me, I'm a momentum trader, I'm a directional trader, so I love trading the squeeze. Now, when you look at this squeeze right here, what this is demonstrating is that the momentum is shifting to the downside. The momentum is going to be these red bars right here, and the momentum is going lower. If John Deere is going to be trading lower, and the squeeze on XLI is shifting to the downside, we're also right down here at a key area of price support. If this breaks, the entire sector is going to fall, and that squeeze is going to fire in a similar way, probably not to the extreme level as XLF, but in a similar fashion to what happened to that reversal in XLF when the squeeze fired to the downside. So the next one that I wanted to point out is another relative strength top ticker in another top sector, which is going to be XLP. So consumer staples has also been incredibly strong. Coca Cola itself has been incredibly strong after not last quarter, but the quarter before it reported earnings. We had this major breakaway gap. The stock traded all the way to new all-time highs in December when, the market was still lackluster at best. Ever since then, it did pull back. As you can see, there was a squeeze here that fired to the downside. This was, again, another squeeze that was a reversal to the downside. Now, when you look at the way Coca Cola is setting up right now, again, you have another squeeze, and now you have all of this price that's below these resistance zones. When you have price that's below resistance and you have, this big wick at the top of the candle hitting that resistance zone plus a squeeze, what that means is that the path of least resistance is down. So when that squeeze fires, it could easily take you down to this next area of price support. So far we have XLF that is firing to the downside. We already know that. We have XLI that's kind of teetering on a brink that looks as though those squeezes are going to break to the downside. And now we also have consumer staples, and specifically Coca Cola, that are ready to break to the downside. So you essentially have some of the strongest areas of the market that are all breaking down. Then I wanted to bring up XLE. XLE is just the same. XLE has been in this incredibly strong trend. This is going to be a weekly chart. You can see that price has shifted below these moving averages. It's just now starting to break down. But again, you have this squeeze. When you have a squeeze like that and price is shifting below the moving averages, all it takes is for some sort of news related event. It needs to have a catalyst. Generally, the squeeze is going to fire or take off when there's a catalyst. It could be, for example, the price of oil dropping. It could be some sort of political news, any kind of macroeconomic event that can cause that consolidation to break out and therefore, breach lower. So if that occurs, then we're not only going to have, XLF tanking, but we also have XLP that's shifting. We also have XLI that's shifting. And after that, we're going to have XLE that's shifting as well. So the moral of this story is if all of these critical sectors are squeezing and firing to the downside, what does that mean for the indexes? Well, it's going to be pretty impossible for the indexes to go up if all of these sectors are trading lower. So that is what I have for all of you today. I hope you enjoyed this episode of your Daily 5. If you would like some more free trading education, please join me on Twitter or on my YouTube channel at Trader Danielle. And other than that, I hope you have a fantastic rest of your day. Let me know if you found this helpful, and I'll see you in the next episode of your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.